You guys hear me okay? Oh my God, I can hear myself too. Excellent. I love when that happens. Okay, so we're going to be talking about predicting profit. And we're going to be talking about leading and lagging indicators. We're going to learn three things. You're going to learn what a leading and lagging indicator is, and how to track them, and what happens when they go off track. So I just want to tell you a little bit about me. My name's Alisa McCabe. I'm the owner at First Steps Financial. And this is my why, this motley crew. I started my company 15 years ago when they were teenagers and toddlers. And the youngest is now 18. So the company has grown significantly. I have 11 employees. Everybody on the team is remote. We do, everybody's certified in QuickBooks Online. And we are coming off of a situation where we had the best year ever. We had 40% growth. We had $1 million in sales. We were crushing it. And then our pipeline dried up. And then we didn't know why. Worse yet, didn't see it coming. And I love this quote by Tom Brady. Not only because he's the GOAT, but because he talks about a tangible score. We are numbers people. We know there's numbers that will tell us if we're winning in our business. So our company runs on EOS. EOS is the Entrepreneurial Operating System. It's based on a book, Traction by Gino Wickman. Woodard has something similar. So we have a scorecard, and we were tracking numbers. But what we didn't realize was that we were only tracking the numbers that showed us if we were winning in a certain area. So leading indicators are things that will show you what is going to happen. They are your crystal ball numbers. They're going to tell you what's going to happen in the future, and it will help you. Hold on a sec. It will help you to know what's going to happen, and sometimes even when it's going to happen. Where can you find these numbers? Where are these magic numbers? These are some of the places you can find them. So in your sales activity, the quotes you send out, the proposals you send out, it will predict your future revenue. In your marketing activity, how many people are going to your website? How many leads is that generating? It's going to predict the pipeline growth and the number that you're going to get. Operational efficiency, employee utilization rate. Does everybody want to know when your employees are going to experience burnout? This number will tell you. It will also tell you when to hire. So if you see a dip in your proposals, it is going to mean less revenue in the future. What is a lagging indicator? A lagging indicator is telling you if you won. Did you do a good job? Yes, that's where your numbers are. So my favorite report in all of QuickBooks is profit and loss by percent of income. Why? Because it tells you where your money that you brought in is being spent. It is what percentage of your revenue is going across your operating expenses. And then when you look at that over time, you can see where your money is being spent. Did you try to decrease your spending? Did it happen? That's how you're going to know, is by running that report. So leading indicators give you time to stare. If something's happening, you can navigate it. And lagging indicators let you know if you arrived safely. If you take anything away from this presentation, learn this formula. Leads generated or proposals sent. What's your conversion rate? I think my percentage little thing is off. But what's your conversion rate? How many say yes? That's your predicted sales. How many days till you get paid? That's when the money comes in. So it took me a long time to learn this. It took me over a year to figure all this out because we were not doing well. We were not growing. We had been growing and then it stopped and we didn't know why. This is where I was stuck. So by a show of hands, how many people here get your new clients from your current clients? Yeah, me too. How do you put a number to that? I was like really stuck. And then we have referral partners, CPA firms, and CFOs and COOs refer clients to us. And so how do we count that? So Fatty over at Clockwork, he got me. He's like, there is a number for everything you do. I was like, so I did some really hard work. I had to figure out what number of touches that I had to do with a client before they referred a client for me. Before they went to their colleagues and said, hey, you have to use them. And there is a number there. And again, you want to figure out what that number is. It's an average. So we have a referral partner and we've had 2 meetings and they sent us an enormous client. That's great. We have other referral partners that we've had 15 meetings with them and then they send us a client. It's the average. Find out what that number is. Count everything. And then you will get to here. So if we have 4 proposals come in, 4 leads come in a month, and we send out 4 proposals, our conversion rate is 50%. So we're going to get 2. Now, if I want to predict it for the future, I just figure out what my average number is for a client. If it's $2,500 a month that we're going to get, that's our average client. We're going to get $5,000 a month. You can start to build out and predict how many sales you're going to get. That is your leading indicator number that is going to help you predict what is going to happen in your future. Then you can build your scorecard. So the 2 things I'm going to tell you about this, pick between 5 and 10 numbers. And do not overcomplicate it. Make it simple. And I'm also going to give you a caveat. You're not going to get it right the first time. And be okay with that. Be okay that this is a work in progress. That these numbers might change because, like us, we were not tracking what we needed to track. So start here. Get a spreadsheet. Line up what your metric is. What are you going to measure? What kind of measurement is it? Is it a leading indicator or is it a lagging indicator? So we have electrical contractors and they have estimates. We can directly predict from past performance what is going to happen. If they send out 100 estimates, we know that 50% convert. They're going to have 50 invoices. What's the average? $2,000. That's how much cash is going to come in for them in the future. So think about those things and what are going to make the difference. Who's going to own it? Are you going to have a salesperson own it? Are you going to own it? Is the ops manager going to own something? And what the target is, and then track the actual. This is where you're going to have to figure out, are you measuring this weekly or does it make sense to measure it monthly? And then are you on track or not? So we have a tendency, I thought it was just me, to ignore things when they go off track. It'll be fine. It'll work itself out. Yeah, it doesn't. Those red flags never disappoint, as my friend Renee told me. So these are the 3 zones that you will see trouble in. Sales pipeline drying up. You're going to have a future revenue gap. I knew my pipeline was drying up. I didn't know what to do. In your profit margin, it's starting to decline, but you can't figure out because sales are staying the same. Rising costs are eating your efficiencies. And this is the biggest one we work with our clients on, is accounts receivable days increasing. Supposed to be due in 10 days. People are starting to push it. It's becoming 30 days. They're going to have no cash. It is going to be an issue. So how do we address these things? First, revenue issue. You can launch, if you start to notice that your pipeline is drying up, take action immediately. Now, I don't work well as a blank canvas, so I'm giving you ideas. You could use any of these or use a version or come up with your own, but do something. I find I do better with suggestions. Launch an immediate short-term promotion. Find something. Go to your current clients who are your source of new clients. Offer them something. Hey, we're going to do a cash flow forecast for you. It's on special, $100. We're going to do 13 weeks for you. Do something that will get them involved, get them excited, and bring in cash. How about re-engage old leads? Now, when our company was going along smoothly and we were killing it, I didn't track who didn't sign with us. I was like, whatever. Nope. I track it now. I have a CRM system and I have a column that if we send out a proposal and we liked them and they were a good fit, we put them in the column that they said no, but still a good fit. So, client in that column, I reached back out to after 3 months. They had gone with someone else. I said, hey, how is everything going? I hope things are well. If you ever need anything, let us know. We're always here. If you have a question about anything, more than happy to answer it for you. Immediate response. Hey, can we meet? The people that we chose weren't that fabulous. We'd like to talk to you. That was pretty awesome because they actually chose the people on price, not on the relationship. And then if you have a sales team, look at your training material. They may not be delivering what you think they are. So they need to tell a story about what service you're providing, what pain points you solve. I have been the salesperson for my company for 15 years, but I have hired someone. So I actually do have sales material finally. All right, your margins. What happens if your margins are starting to go down and you cannot, and we had to go through this exercise too, because our sales were staying steady. You can renegotiate supplier costs. In our industry, we kind of don't do that. You may offer that to your clients, but you can do a temporary freeze on spending. Because we had been so prosperous for so long, we just kind of let things go. So we went through every expense with a fine-tooth comb. And let me tell you, we did kill, combine, keep. We looked through the services that we were paying for, the software we were paying for, and we realized that some of the software was starting to overlap. And as you know, some of these software companies are starting to do more and more things. So we actually got rid of a lot of expenses. And you know what? Since we've recovered from this, we are more profitable than we were before. So it has been actually an excellent lesson in what to do. And then increase your pricing strategically. I know most of you here have been victim to someone increasing the price several times over the year. Don't do it to your clients. But what I will suggest is that in your proposals to your clients, make sure you put a line in, and I learned this from a coach that I worked with because it was in his proposal. It says, after the first year, we may increase your price anywhere between 2 and 10%. And I thought, that's brilliant, so that you can increase prices. We also added a second line. If your growth directly affects the work that we do, we will increase our fee proportionately. Why did we do that? From a mistake we made by not doing it, where a company went from losing money to doubling their sales to tripling their sales. They skyrocketed, and we are trying to catch up with our fee. It was ugly. Don't do that. The last thing is cash flow. Fixing cash flow. This is where you will be the golden child for yourself and for your clients. First one, aggressive AR follow-up. One of my first clients, when I actually did work with a client, she made me called clients after the day after the invoice was due if it wasn't paid. I know it was how much you would love to do that. Hi, sorry, your invoice is overdue. Are you going to send payment today? So what ended up happening was she trained her clients. They were never late because they didn't want to get the phone call. So be very aggressive with AR. Don't let it go. The squeaky wheel gets the oil. If this is happening to you or your clients, tighten up on it immediately and go to collections immediately. Take a 3-step process. And then this one here, when you this is only in the case of if someone is not going to pay you, if they're in danger of not paying you at all because they're having financial issues, offer them a discount. Pay today and it'll be 50% because half is better than zero. And the other one, again, only open in case of emergency, line of credit. But you should only use if the pipeline is full. If you do have sales coming in, because we have seen people use lines of credit to pay bills, and then they just dig themselves in deeper because they don't have sales coming in. So if you have any questions, I also have a template, by the way, for the scorecard. You can see anybody that has a First Steps Financial shirt on, that they're in the back. You can ask them, give them your email, and they will send it to you. It's a spreadsheet. It's a Google spreadsheet, and we also have it in Excel, and it just gives you an idea of a place to start. So thank you very much. It was nice talking to everybody.